So if you go to indicator, from the indicator invite only script, it will be there here, ultimate. You just click on that, you will get. So once you insert, it will come as a default setting. So this is how it looks. So presently I have put it for Nifty 50 and let me put it as 5 minutes. So this is 5 minutes. So by default this is how it will appear. Okay. So now before getting into the details of the indicator, I just want to touch upon a few basic topics, basics of the market. I think most of you are already aware and you are since already trading in the market. So what are those basics? So let me just type somewhere here. So what we have is, we have market, and in market we have buyers, sellers, and they place orders, and those orders are like limit order, market order. Okay, and why price moves. Then next, different phases of market. So let's see one by one. Market, what is market? Market is a place where it facilitates buying or selling of any commodity. It can be anything. It can be a simple food stock, a livestock, or any script, or anything. So any place where a buyer and seller, they come together and they trade something. So it can be food or commodity or any stock or whatever it can be. So that is called as a market. So for us, our interest, we will consider NSE as our market. Okay. So next, in the market, like I said, there will be two participants. One is buyer and one is seller. Buyer is the one who is interested in buying something, and seller is the one who is already having it and he wants to sell it. So these are the two main participants of the market. And whenever they have the difference of their price expectation, buyer is looking to buy at the cheap price, whereas seller is looking to sell at the higher price. So since this is not regulated or a controlled market with relation to the price is not fixed. So because of that, the difference of expectation between the buyer and seller, that is what drives the market up. Okay. Suppose if a person has, for example, butter, 1 kg butter, and he wants to sell it, and he does not know what is the actual price running in the market and what can be the best price. So he will visit the market. So there are few other people who are also come there and trying to sell butter. And suppose there are buyers coming in. If there are 10 people who are selling butter and only 10 people who are interested in buying butter, then there will be a balance. They cannot keep the price very high because they may not get the buyers. Okay. So then the price, maybe assume it is like 100 rupees per kg or something. So it will be traded at that value. Suppose now if there are 10 people who are selling butter and there are only 5 people who are interested to buy butter, then what happens is there will be a competition between the sellers. So they may be ready to give it at some discount price like 95 rupees or 90 rupees or 80 rupees, because they cannot keep it, it will not be fresh, it will be perished. So they are ready to dispose even at a discounted price. So this is called the supply, where demand is less and supply is more. So that becomes the supply zone. So that will drive the price down, actually downwards. Okay. Same situation, if 10 people are selling butter, and now if there are 100 people who wants to buy the butter, there may be some special occasion or some function or whatever it may be. So then what happens, since the buyers are more, now the sellers will try to demand higher price. Now they may not be ready to sell at 100 rupees. They may hold their butter and start demanding. If they are ready to sell at 120 or 130, when most 5 or 6 people have already sold the better, now only 4 people are remaining, but there are still lot of buyers, then buyers are ready to buy it even 200 rupees. So this is what is spiking the demand. So whenever demand spikes, the price will start shooting up. From what it is fair value is 100 rupees, then it will start going towards its over value. Okay. So that is how this market works. That's what we are seeing now. We have seen the market, what is market, who is buyer and who is seller, and orders. In terms of our stock market trading here, you can place an order to buy or sell in various types. One is the limit order, that is you set some value that if butter is available at 100 rupees, you buy 1 kg or 2 kg, whatever, you can type in a limit. Okay. Next is you desperately want that butter, you are not concerned about the price, then you put it as a market order, buy at whatever price it is available at the market. So then what happens, the going price may be 120 or 130, so it will make sure you get the order, so it will buy at whatever price is available. This is the market order. So because of this market order, price will start shooting up. Okay, that is why the price moves. Now different phases of market. So just in brief I'll explain. Okay. So first we have the accumulation phase. So initially all the buyers will be here and sellers will be here. They will be placing a lot of buy orders. It is coming, and once there is a shortage of any commodity, then it will start spiking up like this. Okay. So starting initial phase is called as your accumulation, and next when it shoots up, this is called as the markup phase. I'll type. Then distribution. Markdown. Okay, it will go shoot up, and then again it will here again the price may consolidate, it may be distributing there, and again it will start falling down. Okay, this is called accumulation, first phase. Second phase is markup, third is distribution, next is markdown. It will come down again, it may come to the same earlier support levels. So if it finds support here, again the market will try to move up. Okay, so we have to see for whichever stock we are trading. First we have to observe in a day candle where the market, present market is. Suppose I am taking example of Nifty now. I'll switch off everything. So Nifty, we can see it made a peak somewhere here, high. Okay, so after that it has started coming down, markdown phase. Again it came to some previous support, it went up, again it is coming. So now again it has gone up, again it is coming. So but overall if you see the trend, it is making a lower high. These highs are lower highs and lower lows. These lows are going down. Okay, so overall in the larger scale, if you see, this trend is in a downtrend. It's a gradual downtrend actually. It's not a bullish trend or uptrend. That is what we can observe. So present structure of the market, what we can see for Nifty is, it is in a markdown phase. That is, it is a lot of selling is happening. So this is how we identify what is the phase in the market. Okay, now let's get back to the indicator. Okay, so first if you insert your indicator, by default you will get few settings which are on, and then few settings which are off. Now let's try to go one by one what are these settings. So if you have used my earlier indicators, there will be few things common here. I'll explain what they are. Okay, first thing is your total trading hours. So we need to define what is the total trading hours for this market. Suppose if we are trading NSE market, so it opens at 9:15 and closes at 3:30. So it can be like 6.5 hours total session of the market. You have to define this. So here you can extend. Suppose if you are trading commodity, it may go for 12 hours or something. So that you have to define. So this is required for plotting the initial balance. I'll tell you when it comes initial balance, what is that, okay. Next is time frame. Time frame, I'm giving you three options. One for daily trading, intraday. Next is for weekly trading, that is swing trading. And next is monthly for positional trading. Suppose if you are trading intraday in a time frame between 1 minute to 15 minutes, then you put this into the D or the daily time frame. And suppose if you are trading for 30 minutes or 1 hour and swing position, if you want to hold the position, then it is advised to check on the weekly levels charts. Suppose if you are doing positional trading, you are buying and keeping a stock for more than 1 month, 3 months, then you look for the chart on the monthly. So because there is no point in checking on a 5 minutes time frame for a stock that you want to hold for more than 3 months or 6 months, okay. Then you use the monthly time frame and use the day candles to check the trend and the price movement, okay. So this is your time frame. So by default it will be set to D. Now next is display main targets. So I have devised a new systems for identifying the targets, and in this targets it will be classified into mainly three types, okay. First is I am plotting two different color bands here, one in red and one in green. So we can make out that this can be a resistance zone and the green can be a support zone. So for every day it will be plotting these bands, support and resistance, support and resistance bands, okay. So based on the price opening and the price movement, so we can see the price mostly respects all these four lines of the band, okay. So here on the Friday session it opened little bit gap up, then it came down, so it took support here and then it tried to move up. In this there are 4 different levels: a thick red color and a thick green color, a thin green color and a thin red color, okay. So this is your major resistance, major support initially for us, okay. So after that we have this thin green line. So beyond this, if the price is breaking this and going, then it has all possibility to reach higher targets. So this we call it as a breakout level. Similarly, this red line we call this as a breakdown level. So if this price breaks this red line, so then there will be a lot of weakness and it will further go down. That is how we are understanding this, okay. So this is the first layer. Second layer is we have these black lines, thick black line, then a little bit thinner, and then again thin line. So these are called your extended targets. So once price leaves your basics support band and resistance band, so what are the possible targets for it, the price to reach is, these are the references for us, okay. And next one more we have is intermediate targets, okay. So whenever this range becomes very big, say for example here it is leaving this target line, it is going towards this green line, and it is leaving this also, our expectation is it has to touch this black target line. This is our main targets, okay. But sometimes the price may not have enough steam left to reach up to this level, so it will stop at intermediate levels. So that is painted here in a thin pink line. So this will also act as a good resistance or support. So we have to be watchful, and if we are seeing any rejection coming here at this particular target levels, then we can close our trades here. We can understand that it may not go further to the higher targets, so it is not having enough buying momentum left. So we use this as intermediate targets, okay. So now we have seen the main target and intermediate targets. So this is one more example here. We see price respecting the intermediate target level. Now let's see what other features we have. Now display previous session close. So for us it becomes important to understand and see where the price closed in the previous session, like your main target lines. Previous session close also will act as an important support or resistance. So there will be some reaction with the price whenever it reaches this level, because the participants in the market or the market will understand where it closed yesterday's or previous week or previous month. So whenever it comes there, so there will be some reaction for the price. People may try to book profits, or some people may try to enter into trade, some people may try to exit the trade. So it becomes important for us to keep watching this level. So that is plotted here in the orange color dots. So this is the previous close. So you can choose to switch this on or switch it off based on your preference. Okay. Next is trailing stop loss. So simple feature that I have added. You can wait until the price breaks this level to close your trade. For example, here if I want to show you, price is trading above this trailing stop loss level, and this keeps getting plotted wherever price is moving up, and here it breaks this your trailing stop loss curve. Okay, so at this level you can plan to exit your long trade, and then here it is coming totally below this, you can initiate your short trade. So it's a simple guide. I have tried to keep it very close to the price movement. I have not kept too much of a gap. This is nothing but a simple exponential moving average curve. I think I have kept price of period of 8 or 9, I think. This simple feature, so visual, to check for visual confirmation whether the price is below that or above that. Next is candle midpoint. So for every candle, irrespective of the time frame, it creates or plots a dot, a black color dot. Okay, here. So why are we plotting this? Is there is one important concept for my indicator setup, and for my understanding I'll tell how it works. Okay. Let me try to find some good example. Okay, so what we observe is, we see for explosive candles. Explosive candles are these candles which are having more than 3 to 5 times the body size of your normal candle body. Okay, so this candle, if you observe, so it is having see, these are our average candle size, body size. So whenever you get a big explosive candle which is having at least 3 times or 5 times the body size, then the middle of that you can take it as a strong support or a resistance. You just draw a line here, the middle of that. So here we have sellers sitting at the top here. Okay, they have started selling the position and they are holding their position. So price started coming down. So after some level, again the buyers will start coming here. They will try to add positions and try to push it up. Okay, so these sellers they have added positions at various levels. Okay, so what they will do at exact middle of this, they will again try to add more positions. They don't want to lose the battle, so they will add more position, and they see to it that price goes further down. So when it goes down, only then they will get the maximum profit. So the last line of defense for either the buyers or sellers, it will be at the middle of this level, and this middle is not for every candle, it is mostly for the explosive candles, which is having at least 5 times the body size of the average candle. Okay, so that middle, if you start marking every such big candle, at the middle of that you will see price will come and try to fight. There is a fight between buyers and sellers. Whoever is strong, they will try to push it towards their direction. So this is why we always observe the midpoint of the candle is plotted. So this works in all time frames. It can work in 5 minutes, 15 minutes, or weekly 30 minutes, day candle, any time frame you take. Okay, so this is one feature that is available in my old indicators also. I am continuing this. Next is the turning point. As the name suggests, the price tends to turn around whenever it touches this point. See here, price will be pushed away whenever it comes in contact with this particular line. So you can observe, and historical levels also. It will act as a strong magnet, or it will attract or repel. Here it is getting pushed back, here it is getting pushed back, from here it is again getting pushed, here also rejection, pushing down. Okay, so you keep the level on, this particular level on, and be watchful. Whenever the price reaches this level, there will be reaction, price will try to get pushed back again. Okay, now next what we have is initial balance, high and low. So as the name suggests, initial balance is whenever the market opens. Before the market opens itself, there will be a lot of pre-market orders for big institution players and trading houses. Market is allowed to trade between say 8:30 to 9 o'clock. So until then they have all the pre-market orders, so that will be lined up. So that is going to create the direction or the trend for the market. But that may not be true always. So initially when the market opens, so there will be a lot of buying or selling. People who already have been positioned since previous sessions, they may try to close their trades, and a few people who trade at the initial open itself, they may try to place huge bulk orders, and after that they may just exit. They may not be interested to trade. So this initial trading period is very volatile normally, whether you take for any stock or for index. So that is very highly volatile, and that can be most of the times false also. The direction or the trend, whatever it shows, it can be false. So we cannot be sure that it is going to trade in that direction only. For example, if I am taking Nifty on the Friday session, it opened gap up and then it opened very strongly. So what happens is, now we may think, okay, it is going very bullish, very aggressive, it has also opened gap up, and people will start adding more positions. So the first candle went up, second candle also, this I have put in 5 minutes time frame, second candle also started moving up. So the body will be completely till here. Then we will add lot of positions, we will get into position. Then after that you see third candle onwards, it started coming down, it started falling down. So why we are plotting this level is, so what happens with this indicator is, it is going to plot dotted lines, and it is going to mark the initial high and low in whichever time frame you take. For example, 5 minutes, this is the high and low of the 5 minutes. It will be plotted throughout. It will give a guide throughout the day. This will be plotted in advance. Okay. Suppose you change it to 15 minutes, so it will take the high and low of 15 minutes. That will be different. 15 minutes high and 15 minutes low level may be different. So it will plot. So you will get a guideline. Where is the high and the low? For it may be different in 3 minutes. First candle of a 3 minutes may be different. See, this is for 3 minutes. Okay. Now if we observe here, I'll come back to 5 minutes. it made a high, it is plotted, and it has made a low, it is plotted. Now in this indicator, how we are going to use this feature is initial balance high and low. We will wait for the price to break this level convincingly with a strong bullish candle. Only then we will be confirmed of the trend, and then we can trade in that direction. For going bullish, we will wait for the price to break above this level, and for going bearish selling, we will wait for the price to break the low level actually. So this is for a very safe trading. Those of people who want to trade very safely, so they can use this as a guideline. Okay, so here what happened, second candle did not break it convincingly, then it started coming down. So if you assume, okay, now it is coming down, it is a good time to sell, again we will be caught in a wrong trend. It again started moving up, so again we cannot be bullish, because this will act as a resistance, initial balance. Exactly at that location it got rejected again, and it started coming down, and now here it started coming towards the low, but we cannot sell here also, because there is no convincingly a candle closing below this level. So it tried to play within this level. Only then it has broken this level, but we have already a target level coming very close to this, so we are not taking a trade. It will not be suitable here for us. Okay, so that is how we have to treat this initial balance high or low. I'll take some stock now, for example Tata Steel or Mahindra and Mahindra will take. Okay, Mahindra and Mahindra example we can take. So this in grey dotted line, it has made a high and a low. I put 5 minutes time frame. So first candle was very bullish, then some selling came, so it came down again towards the initial balance low line. It did not break, so we can wait. Then again it tried to come up again. So here at the initial balance high, it has played a lot. So it has stayed here for almost 7-8 candles in 5 minutes. Then it has broken this level. So this is the ideal position for us to take. So once we take a trade here, then we can wait till it goes to the next target. So it has given the target here. Then after that it has played some time here. Then again further it has tried to move up towards the next target here. Towards this target. Okay. So this is how we can try to use this as a guideline. Initial balance high and low. Okay. Next is smart ribbon. As the name suggests, I have created a ribbon which is going to give you a guide to the trend. What is the prevailing trend? So same stock we will take, Mahindra and Mahindra. See here there are two colors for this ribbon. One is blue and next one more is orange. Okay. Whenever the ribbon is in a blue color and the ribbon is, the width is little bit more, then, and if it is pointing upwards, trending upwards, then we can say the trend is very good and it is very bullish trend. Similarly, downside, whenever the ribbon is in orange color here, and again it is thick and it is pointing down, then we can say the trend is bearish. It can be bearish as long as the ribbon is orange color. Okay, we'll wait for it to turn blue, but if it turns blue also, if it is very thin, then we'll wait. We are not going to take a trade in the buy direction. We'll wait for it to become little thick. Only then we'll take trade in the buying direction. So this is the smart ribbon. It is going to give you the direction of the trend and also the strength of the trend, whether the trend is strong or trend is a little bit weak. So the guideline is to take a trade whenever this ribbon is pointing upwards for buying and also thick. For selling, you have to wait for the ribbon to be pointing downwards and in orange color and then again thick. Okay, we'll try to avoid trade whenever the ribbon is flat. It is not pointing up or not pointing down. See, this zone is total sideways. So whenever it is in sideways, we will try to avoid taking any trade. So that is the logic. See here, if you see, initially the trend was very strong. It started going up, and here it started becoming very thin. So you will come to know that the trend is becoming weak, so it may reverse anytime. So here it turned into from blue to orange, it turned. Okay, then we can be sure, okay, now selling will come. So if you are in a long position, you can try to close your position, book profit, or keep your trailing stop loss. You can switch on your trailing stop loss. Once it breaks the trailing stop loss, you can close the trade. Something like that you can be having as a rule for yourself. So that trailing stop loss broke here in this candle and also in the next candle, but here the orange color came here itself, so we know that now the selling may start. So that is what happened here. Okay, again this works on all the time frames, works on day candle, weekly, or even intraday also. Okay, next, one more important feature that I created is a candle coloring. See, without candle coloring, in the standard candles we have this traditional green and the red. Okay, so we may not know exactly whether the price is coming down or this is a small retracement happening, so there will be a doubt. So for that you will need lot of understanding, experience, knowledge to know whether it is an actual breakout or a fake breakout. We will not know. Okay, see here these candles, it was falling down, then again we have one strong green candle, so we may think price may start moving up. So what happens is we may get into the wrong direction trades. So to avoid that, what I have done is I have built in some logic and I have tried to color the candle taking reference of the trend, not only from this time frame. I am trying to capture trend from little bit higher time frame also. So what it gives the advantage is, see here from the beginning first candle onwards, throughout up to this point, all the candles are painted in green color only. It means to say it is a bullish trend. So you can be in the trade without exiting, because here it is showing a green color. Okay, whereas without indicator, if you see, so we have in between again so many red candles here, but that is over painted, and this based on the trend it is painting green color, and then the pink started. So whenever you see the opposite color coming in, then you can try to close the trade. So to make understanding easy and to keep ourselves into the trades for the longest possible duration, I have tried to write some logic and create this and forcefully over paint on the existing candle colors based on the trend from the current time frame, as well as taking reference from the higher time frames. So once more we will see here. So in the naked chart, if we see, there are a lot of green candles here trying to come up, so we may get into this trade forcefully here also and here. So a lot of green candles we have. Okay, but now if you put on this indicator and now if you see, so it is showing you the trend, bearish trend, completely up to this. So here there is no question of you taking any long positions or long trades, or there is no question of you closing the trade also, because it is still going down. There is no indication for you to close the trade. Only here we got this first green candle, you can close the trade here. So the advantage is you know what is the trend, which direction it is going, and you know when to exit. So you can ideally sit or wait until this change of the trend comes. So after this it started going green, completely bullish. So this is the advantage of this indicator. Next is, for this particular indicator, the reason why I have kept it as ultimate is I have created two different sets of signals. So one is like safe entry or safe exit signal. So many times people were asking from my earlier indicators, I had given this color, there was this smart ribbon was there and candle colors were there. Even then they were not very confident or sure. They wanted something like a you should buy here or you should sell here, that kind of information. So for that purpose, in this indicator I worked extensively on creating the signals, and also I try to create a balance that there are not too many signals trying to come for every 5 minutes, 10 minutes, and whenever a signal comes, so it has to stay at least the trend until the trend is on that particular direction. So for that purpose I have created a signal system here, and this, as the name suggests, it is for very safe entry and safe exit. So as soon as you say safe, it means to say it will wait for confirmation of the trend. It will not give you a very early entry or a quick entry as soon as a change in the trend happens. It will wait for few candles for the trend confirmation, and then it is giving you entry. So in the result of this is you may get little bit late entry for 1 or 2 candles. Even for exit also you may get little bit late information for 1 or 2 candles. But overall, if you see in the long time frame, you are still in a good profit. So for this particular stock, you got a short signal here, and that has continued for the next day also, and here it is trying to give a signal to go long. Okay.
Oh, Mohan, Pradeep, question.
Yeah, Pradeep, tell me.
Why are these green candles having different border colors? Some of them are red and some of them are green.
See, if they are red, means it is a bearish candle. For example, like I told you earlier, even though the candle may be green or red, I am going to paint it based on the trend. For example, here this candle, you see the border is red color, but it is a green. For me, it is a bullish trend. If I switch this off, it's actual red candle.
Got it.
Okay, but as per my trend, it will be green. So that's why the border will be red, to identify actual price is coming down in this candle.
Got it. Thank you.
Yeah. So this is the signal system what I have created. Okay. So what is the advantage of this is, whenever you want to take a trade, very safe trade, you can rely on this particular signaling system, and this works on whichever time frame you want to trade. For example, you want to trade for 5 minutes or 15 minutes for intraday, or even 30 minutes, so you can put that particular time frame, and it will automatically adjust and start giving that levels. Okay. So those signals may be different, coming at a different price level, and also signals may be very fewer as and when you start going for a higher time frame. For example, let's start with the 1 hour time frame. 1 hour time frame on a stock called Mahindra and Mahindra. Okay, so it has given a long signal on 23rd of June. It's 10:15 candle. Each candle is for 1 hour. Okay, so now here we got a signal to go long. This signal will start appearing as the price meets the condition, but after the candle close only it is advised to take a trade. It is better to wait till the candle closes. Okay, but even before the candle closes, as soon as the conditions are met, whatever entry criteria or logic I have written, as soon as that logic is met, this long signal will start appearing on the screen. So you can wait to take a trade after the candle closes. Okay, suppose now if you have taken a trade here and it is still in the position, no close has come. After this candle close to the current 72 points it has given. Suppose if you are taking a future with Mahindra and Mahindra lot, maybe 250 or 300 quantity, it's a good capture. Now I'll try to come to lower time frame, 30 minutes. So 30 minutes also same, in 9:45 you got little bit earlier entry, and that is again still in the same trend. Now we'll come to 15 minutes. 15 minutes, here you can observe there are some places where it has tried to close the position, and again it has tried to give you a new entry. Again here it has closed position, it has entered, because as and when you go for the lower time frames, so it will break the total trend into small pieces of trends, and from there it will try to tell when to enter and when to exit. So what advantage is, you will get multiple re-entry opportunities. Suppose you have missed to take entry here at this particular level, you can wait till it gives one more entry level. It gave us for one more entry level here. You take this trade and be in the trade until it gives you an exit. So like this. So now 15 minutes is done. We'll go to 10 minutes. More signals. 5 minutes. Again here more signals. If you go to 3 minutes, so you have a lot of signals here. Okay, so people who trade in 3 minutes or 1 minutes are those who scalp for very small entry and exit points. Okay, even for them it is very beneficial. How to trade that is, like for example, here they got a long signal, so they will take a position and wait till this short signal appears. Here, this one. Okay, then again here they have one more long signal. They will take a trade and they will wait. They may not wait exactly for a target line or next signal. They may book whatever they have in mind, like 5 points, 10 points, something like that. For scalpers, if you go for Nifty or let's say Bank Nifty, you can trade Nifty, Bank Nifty or anything. Okay, so higher the time frame, it is better to trade. You will have fewer signals and you can capture good points. For example, this is a Nifty Bank 10 minutes time frame. Here you got an entry, take position and wait, it goes up, and in between you have to book targets multiple levels. So you don't want to book, you wait for the signal reversal, and then you close, then go short position here, like this.
Okay, sir. Whenever we see the long that command, right? So we need to buy, and whenever we see the short, we need to sell it, correct?
Yes.
Okay. So how we do sideways market, sir? In movement is in sideways.
Sideways, like it will give you too many signals. During that time, you can avoid taking trade. What I told is, like earlier, I told this ribbon. Whenever this ribbon is flat, don't take trades. Only when the ribbon is trending up or down, then you look to take a trade. When it is flat like this, for example this zone, you avoid taking trades.
Okay.
So next is along with this safe entry and exit signal, I have created one more indication called as a quick entry, quick exit symbols. Okay, so some people, like I was telling you, who scalp for very small entry and exits, so they may not wait until you get the signal here in the main safe entry, safe exit levels. So they may want little bit earlier. So for them I have created this system where it is going to give you little bit in advance before the actual signal comes. Okay, so this is one place I'll show you. So here it is marked with a red color star and also a parachute symbol I am giving, just to let you know that price will start to fall downwards, like a come down, like using a parachute. Okay, actual short signal came here after this candle, but here initially advance you can take here this notification that now price may start going down. So that is what it gives you here in advance, little bit ahead of the actual signal coming. Same case here, it is giving you a red star and then short symbol came here. Even for going long also it will give little bit in advance. Here you see it came here much before this short signal came. Okay. So this also will tell you to close your position. Suppose you are long here, after this signal you have taken a long position, you are in position, it is going up like this. So as soon as you see this red star or a parachute with a big candle, either going up or going down, then you can close your long position. And if you want to take a short position, you can take immediately, or you wait for this signal, short confirmation, safe, then you take a short position. So it will work in two ways. It will give you an early entry position, and also it will try to give you an early exit for your long trades. Whatever trade you have taken in long position, you can exit based on this symbol. You will come to know in advance that price will start going down. This is a parachute symbol. For going long, I have given a rocket symbol. See here you got a rocket symbol and a black star. On the previous day, last candle itself you got. But actual long signal came on the next day after the first candle close. So if you want to take a position in advance previous day itself, based on this rocket symbol you can take position. Black star and a rocket symbol I believe. So it is indicating that price will shoot up like a rocket. That's what happened next day. It went up, so you could gain some profit here with that position. Okay. Next, number of bars for safe signal confirmation. So this is one feature I am trying to give, where you can control how many bars you need to check for the signal. Yes, there may be some fake breakouts coming in. So in order to control that fake breakouts, what I have tried to create is try to give an option where you can check how many candles you need to take. For example, here if you observe, in this particular time frame, here we are seeing a lot of buy sell signals. Okay. There may be a fake breakout also. In order to avoid that, I have given here an option like by default it will be set for 1 bar. Now make it like 2 bars, and now you see the levels here. You have only one long in this particular day. There are no other signals. That's all. Okay. Anything it is giving as a sell here is like a fake. It is not going to sustain. Overall the trend is like bullish only. So that is what it can give you an idea. Suppose you want to go for 3 minutes time frame, and I'll take Nifty. Here you got a one long signal, it went up, and then again one short, it came down. Okay, this is I put the condition as a 2 bars for confirmation. Suppose I take it back to 1 bar, and now you see between there may be a lot of signals coming. See here, it is asking you to go short, but this is a false breakout. To stop all these false breakouts, this option you can use. You can change it to 2, so that false breakout or breakdown is avoided here.
So which is preferable, sir? Either 3 may be accurate or 2 may be accurate.
No, 3 will be too late. Only you can use between 1 or 2.
Okay.
So if you are a scalper, you use for 1, or if you want to take a trade and you wait normally till the end of the day, or you continue the position, you use 2.
Okay.
Okay. Next is trend indicator. As the name suggests, it is showing what is the trend in the market, and by means of the background color. So the background color I am painting here in the blue, and as well as in the yellow color. Okay, blue is like the trend, current trend is bullish, and yellow, the current trend is bearish. So this I put in 3 minutes. If you put as 10 minutes, it looks good, or 5 minutes, whichever time frame you want to do. Okay, so whatever the major trend is prevailing, it will try to give the background color in that particular trend. So just by switching on or looking into the any chart, you can come to know what is the trend, present trend. This particular is yellow, so it was in bearish trend, and this complete zone is blue color, was in bullish trend. Okay. Next is supply zone, demand zone. It is one of the important aspects of this indicator. I'll switch off these signals first. We'll spend a few minutes on this, understanding what it is, how to use it. Okay. At the beginning of this session, I was telling you about the market structure and why price moves, what is demand and what is supply. Okay. So wherever there is a huge supply, it is denoted by ESZ. Huge supply is when there are more sellers than buyers. Then they will start selling the stock at whatever price is available. So that will drive in the panic selling mode. Big candles will come. Okay. Similarly, whenever the buyers are more and people who are selling the stocks are less, that creates a demand zone. So that demand zone is like people are desperate to buy at whatever price is available, because somehow they know that price of the stock is going to go up. They want to quickly enter into the position. They will start taking stocks at the market order. So because of that, it will start driving the price up. Okay, that zone from where lot of buyers are showing interest is called as a demand zone or a DZ. So here supply zone, seller zone, demand zone, buyer zone, DZ and SZ. So we try to understand by going a little bit on a higher time frame, and maybe I'll switch off all other features. And keep only this. Okay, so now let me take example of Nifty. Nifty on a Thursday session I'll take. Okay, for example, here this is where Nifty closed on a Thursday session. So once I have this closing data available, so I'll go to this supply zone and demand zone. I'll switch this on. You can take in a little bit higher time frame. Okay, so now here I'll try to look for one or two zones which is above this price. This is the closing price I have indicated. So this I am having above this price, and one more having this above the price. Then for below this price I have one demand zone here, and one more previously in the almost similar. So I'll take one as this zone, and maybe one more I can take this as future purpose. Now I'll mark these zones with the help of a band. As for supply zone, I'll mark it. So here one more I'll mark. Okay. Now for demand zone also I'll mark. So this normally you can mark in 15 minutes or 30 minutes or a 1 hour time frame. Now I'll come back to my regular trading time frame. It can be, you can be trading in 5 minutes or 10 minutes, whichever time frame. So now you see here, Friday when the market opened, it opened at this resistance zone. Earlier whatever we have marked as S said, in that zone it opened and it tried to come down, and it found support here in one more zone, but what we have highlighted with this. So price has played between these levels only. Okay. Suppose if you are taking a trade, short trade somewhere here, say you are shorting based on a candle or signal, so this is your first safe target area. So you can wait for the price to come up to this level, because this will, the whatever we are marking here as a supply zone, it will also act as a support zone. Okay. So it came here. Suppose if the price broke this level, then you can wait until this next support level. So that is how we take these levels. Okay. So very important aspects, needs actually more time to understand. So what you do is, normally the theory is, if you are trading in 15 minutes, you take three time frame higher, 15 minutes, and in that 15 minutes you mark the levels for supply and demand, and then you come back to 5 minutes and then look for trading. Suppose if you are working in 15 minutes time frame, you go for 45 minutes or 1 hour. In that 1 hour you find where are the supply zones or where are the demand zones, and you try to mark those levels, and that will act as your support and resistance. So you can trade between that support level and resistance level, and it is advisable to trade whenever the price is at the support level, for example this level, in order to go long, or in order to go short you look for price reaching this was earlier supply zone. When the price came here and started selling off first candle, you can go short here. So in between, if the price is between your supply zone and demand zone, don't try to take trades in between. For example, here this is a consolidation, don't try to take any trades here. Take trades either at the low level or at the high level. Always the golden rule is buy at low and sell at high. That is the theory. Now look back period for this supply zone and demand zone. By default I have kept it as 5 period or a 5 bar or 5 candle, whatever you want to say. Suppose you want a little bit more. So by default, if this is the setting I have given, it is going to give you accurate supply zones and demand zones. Sometimes you may feel there are more, so you can play around with this setting. I have given 5, so you can increase 5 period to 7 period, so you will get lesser supply zones and demand zones, so not confusion. Or sometimes if you are not getting too many zones, then you can try to reduce. So you can write, keep it to 3, so you will get more zones, but that will be too much of cluster here. So if you keep 7, you will get less zones. So keep 3, you will get more zones. The ideal balance I have kept as 5. So this is good enough. So that is left to your individual setting. How we want to keep, you can use it. Okay. Next comes earning day line. This is also one important feature in this indicator. So for any stock, we have to go to the monthly time frame. So go to the indicator, and here you set as month, okay, monthly time frame, and put this earning day line the symbol on, this feature on, okay. So now you are going to get in a purple color lines plotted like this, a dotted line will be plotted. So what is the importance of this line? I'll tell you now. So for every stock, for every quarter, they will have to declare their earnings. That is shown here in the trading view as a symbol E. Okay. So for that particular quarter, what is the earning? The results are announced. Okay, now I'm going to switch off all other lines. So for every 3 months, the quarterly results are announced. Based on that result today, the moment, I am plotting this line. So this, if you see, from the previous quarter to the next quarter, price is moving up. Again, from this quarter to next quarter, price is moving up. So we know that this buyer sentiment is strong on this. So they are expecting the Infosys stock to move up. So they are taking positions and continuing with positions. So for us, if you want to take entry into any stocks positionally, so it is always advisable to wait for the reaction after the earnings day. So just before the earning also, they will try to push the price down, and after earning also, they will try to push the price up. So few days just before or after, you can plan to take entries. Okay. Now you see here, this will act as a strong resistance line, the earning. Whenever the price goes down, again it will come back to the earning, then again some sell off, profit booking. Here it will come and towards the earning line. In this case, Infosys, if you see, price started breaking down, coming here, and it gave some accumulation phase, and then again started moving up. Suppose if you are taking trade here, price is moving up, and then here you find the price is struggling to break this level, the earning day line. So when it is trying to struggle and break this line, and when you see one candle, two candle sell off coming, you can exit quickly your long position, and in your options or future you can short. Price is going to go down, and up to where it is going to go down, for that also you can use the previous historic earning day levels. This is one level and this is one level. So these levels will be registered for this particular stock in memory. So it will take that reference and then start coming down. Again, when it has to move up also, it will take previous levels reference and it will come. So this will be the next level to look out. So for Infosys, suppose you find a good bullish trend, what is the level it can go is the previous level, the earning day levels. So that is how we can consider this and trade. It is always advisable to look for this in the monthly time frame and a day candle. Next, one more I have given feature, trend reversal curve. We'll come back to our intraday time frame. So this acts as a stop loss or a trailing stop loss at a little bit higher level. Okay. So once the price is breaking this level, then we can be sure the trend is going to be reversed. So that's how we take this as a trend reversal curve. Say for example, here we have the price trading, this ribbon we have as a guideline, it is going up. Price has broken this ribbon here in 1 or 2 level. So one more additional confirmation, we will wait for price to break this trend reversal curve also. Once it breaks the trend reversal, we can be very sure now the trend has changed, it is going to go down. After this break only, it is confirmed. It is like one more level of your trailing stop loss. Okay, but this reference is coming from a higher time frame, and in the live market you will not get this trend curve. This trend curve will not be moving in line with the candle. It will move with respect to one time frame behind actually. This trend reversal curve time frame, you can set which time frame you want. So normally, ideally, if you are trading in 5 minutes time frame, you have to keep this trend reversal curve time frame 3 times higher. Then by default it is 15 minutes. Suppose if you are trading in 15 minutes, then this trend reversal curve you have to set it to 45 minutes, 3 time frames higher. So it will come like this. Okay. So next 2 more features I have, I will explain and then we can conclude. So this indicator is based on a no stop loss strategy indicator. That is, if you are trading based on the signals, there is no stop loss for this. You will only have to exit the trade whenever the trend change in the trend is shown by means of this signal. Say for example, here you are taking a trade, a long signal first. You are in a long position until you see the next reversal signal short. There is no stop loss. Once you take a trade here in the long position, if somebody asks me what is your stop loss, I will say there is no stop loss for this strategy. You be in the trade until you see the next signal coming. Okay, so, and if you are taking a short here, this position, you will ask me what is the stop loss. I cannot tell you because this strategy is not based on stop loss. This is a total different strategy. So suppose even then you want to keep your stop loss, then I am giving an option to keep a stop loss here. So here we have take profit and stop loss. Say for example, stop loss I will keep as 40 points. Take profit I will keep as 60 points. This I am keeping for Nifty, or we will keep it for Bank Nifty. For Bank Nifty I will keep 100 points profit, 50 points stop loss I will keep, and I will have to keep this on. Okay. Now we will see how it works. Okay. So here, if you observe, here we have a flag called long. Okay, this long is activated, or you take position after this candle close. So from this candle close here we see a thin red line. This is your stop loss of 50 points, and this green line is a target of 100 points. That's what we have set. Suppose I change it to instead of 100 I will keep as 200 points target and 100 points stop loss. Now that level will change. See, from this candle close, this red line is 100 points. Okay, and again from the candle close, this green line is 200 points. So we will have a guideline coming in here. Where is your stop loss and where is your target? So as soon as that particular target is achieved, here you will get a signal called as a long take profit. It is asking you to take profit in a long position. Okay. Similarly, here you got a short position here. As soon as this candle is closed, the short position, it is giving a signal. I have put a 100-point stop loss. So this red line here, it is giving me 100 points stop loss, and this green line here, it is plotting a 200-point target. Okay. So as soon as the price came down, you have shorted it. Price came and touched this 200 points. It is showing a short take profit. It is asking you to take profit and close. So here, as per the theory, you are going to close after this signal comes. Once you have short, only once you get a long, you are asked to close. But you don't want to lose this much profit, or you don't want to wait for too long into the trade. So then you can define your own stop loss, your own targets. So here we got this guideline. In this candle itself, it asked us to take profit of 200 points. You close your trade. Then you get a long position, then you look to enter long. So like that. So you can customize this to whichever points you want. For example, this same long profit I am going to make as 100 points. Every time you may not get, or I will say 300 points. So 300 points, this line is shifted here. So this is your 300 points, and here after 300 points is achieved, it is asking long profit. Okay. Take or book profit. And suppose you want to trade Reliance, particularly any particular stock, then you can go based on the stock. You can keep, I want stop loss 10 points, profit 20 points. Based on that, it will adjust and plot the levels. Okay, so that manually you can adjust. So everywhere it will show where the profit is. For example, this is a long signal we got here, and this is your stop loss after this candle. From this candle, 10 points is your stop loss, and then from this entry, this is your entry, and this is your stop loss, and this is your target, this green line. So once the target is touched, it is showing take a profit or long take profit, like that. Okay. So that concludes the features of this indicator. So till now, so far, any doubts? Anybody has any doubts, can ask me. So how is the session so far, or how is the indicator?
Sir, for trend reversal curve time frame, for 15 minutes we keep it as 45 minutes, is it?
Yes, three time frames higher.
Uh-huh.
Any time frame you are trading, calculate 3 time frames higher time frame.
Okay.
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 So now we'll quickly go for one more important aspect called as a multiple time frame analysis. Okay. So in this trading view, for the basic free account, they will give you only one layout. You cannot have different time frames. If you take a paid account, here like this you get different options like 3 chart layout, 4 charts layout, something. So you can keep different stocks in different chart, or a same stock you can keep in a different time frame and trade. So now, for example, I'll take Nifty and tell you how to analyze in a multiple time frames. So one time frame I am keeping as a 5 minutes for my intraday, and here this indicator setting I'll keep as D. Okay. Then one more time frame I'll keep for month. I want to see on a monthly chart what is the performance. So what I'll do is I'll go to the indicator setting and I'll put here as month. I'll select month. Okay. I'll remove all the candle coloring, entry, exit signals, everything. I just want only the levels and the candles. And earning day line I'll keep on in the monthly level. Okay. This is one. The next one more what I will keep is for 30 minutes I'll keep. So for this what I'll do is I'll go and put as a week. Again here I'll remove signals, I don't need. Candle color also I don't need. Okay. Then I'll keep this on. So this is on 30 minutes weekly time frame. I have one chart, and this is on a monthly and day candle time frame. I have one chart, and for my intraday I have 5 minutes, and this is in the day setting time frame as a day setting, and a 5 minutes candle I have one chart. Okay. Now in order to see where the stock is trading with reference to the higher time frame, I'll first go to the weekly time frame. In the weekly time frame I'll see. So here what happens is you get the levels for one complete week. This is day 1, this is day 2, day 3, and day 4, and day 5. 5 days of a week. For all the days, 5 days, 1 week, you have only one set of levels. That is your supply zone or your resistance band, and this green color is your support band. Okay. Now if you observe here, price will start moving when it is breaking this level. Our natural expectation is it will try to touch the resistance level once. So again, once it is getting rejected from the resistance, it will try to come back to this supply level. Again, strong support zone. It left from here, then it went to resistance. Okay. So it is easy to understand for us. Suppose if you want to carry position on a weekly option or a monthly option or a future you want to carry position, so it is advisable that you look for taking position in this particular time frame. Now we have seen price, this is for previous week. On Monday it traded between these two levels. Okay. Then we will wait for a breakout after this level. It broke out, so we had a gap up. So you can take a trade here and wait for this particular target line. So then it started getting rejected here, then you can take a trade and wait up to this level. So now once we know price is so this is going to give you what is the trend. For example, on Monday we have the breakout, on Tuesday we see a gap up and price is moving up. On this particular day, Tuesday, you come to lower time frame, and there you look for taking only long positions. Don't look for any, I will put in 10 minutes. Don't look for any short positions, because now we know that particular trend is in long. See here, this particular day, when it is giving you a short here, don't short, because that particular day here we know the trend, it is going up and it has all possibility to touch this level here. Okay. So as soon as it came here, this level here touched, we will just try to mark that level. So fortunately for us in intraday also, we have a strong level here, target level. So once it is touching and we see as price is selling off here, then also a short here in the intraday level, then you can take a short position and you wait. So if you want to continue for next day, you wait till it comes to the support level. So like that you can correlate between two time frames. And higher time frame on the monthly chart, you see here prices getting rejected at the resistance zone, and then you can be sure that it will come to this support green line. If you want to carry monthly position, then it breaks that level, you can wait till the next target line. If it breaks again next level, you can wait. So like that it trades between level to level. Even if you want to go long also, here you see price was falling down here. This is on a day candle monthly. We have one support line here. We saw a good candle. So this is a doji. So this is a doji reversal pattern setup. So after this particular day, you can take a long position. And for target booking, you have the levels. This acts as a strong resistance level. and here again you see this also acted as a strong resistance level. So we saw one candle sell off coming and one more gap down, then you can take a position here, safe position to go short. It goes short again. For target you have every level coming in here. It came down a small bounce, then again it came down this level like this. So the advantage is if you are having three different time frames, so you can easily understand what is the trend. If it is now bullish, then you look for only trades on the buy direction. If it is bearish, you look for trade in the sell direction. Now in the 30 minutes time frame, if you observe here, very easy to understand. Price has once taken a breakout, went up to the resistance, then from resistance it came down to support. From support again it has tried to move up. So now in the last Friday session, it is struggling to break this level. It is stuck in this zone only. It is unable to break this level convincingly to move up. So this becomes our next target. If it breaks up, if it is breaking down, this becomes our next target. So just by looking at the chart, we can observe the price is unable to break this level. So we will wait for one strong candle breakout above this. Then we can be sure for next higher level targets. So this is how you correlate with the higher time frame and take trades. Okay, very helpful for weekly positions or monthly positions. And based on the higher time frame trend on the intraday, you can take trade either on the buy direction or sell direction. Otherwise, mindlessly you just keep trading. Whether when the stock is very bullish, you try to take trade in the sell direction. It may not fall very aggressively. It may quickly reverse. So that is the advantage of checking in the multiple time frames. Okay. So I have explained multiple time frames and also these levels. Now I'll explain how this algo strategy works. Okay. Okay, now put this for B and this also. So here first it will ask you what is the time frame, the strategy, from what time to what time you want to trade. So market, like some people, they want to wait for first 30 minutes or first 1 hour and only then they want to enter into trade. So you can define, this is a algo setup I am explaining now. The same indicator I have converted into the algo setup as a strategy, and you can automate this to your trading account, broker account like Fire, Zerodha or whichever account you have, and you can put capital in that and allow this system to trade automatically. By it will trade even if your system is switched off or phone is switched off, not in front of system, it will trade on your behalf. Okay. Time it will ask when you want to start the trading. So some people by default they will start 9:15. Okay, some people they want to start trading at 10 a.m. only. They want to avoid the initial drive and initial volatility. Okay, and when you want to end, say 3:30 you want to end when market closes, or you want to end a little bit early. So some people they will say by 3 o'clock I want to close my trades. Whatever position I have, forcefully it will close. For that, here one more option I have given. End of the day square off here. If this is switched on, by end of the day whatever position you have, it will square off at whatever time frame you define. Suppose you want to define at 3 p.m. or you want to define at even 2 p.m. so it will close. See here you see square off. It will square off at the candle you see 2 p.m. After that candle close. Same this square of here you see. I want to close at 3 o'clock. You go and change here to 3 o'clock. So it will shift to 3 o'clock like this. Okay. So you can define when to start trading, from what time, and also define when you want to stop all the trading. Suppose you want to continue this particular position into the next day, then you go and switch this off. End of the day auto square off, you remove this. Then it will not square off there, it will continue in the position. You are in long here, and this long position will continue.
So how much capital required for Algo trading?
So for Nifty, you need Nifty or Bank Nifty capital for 2 lots you need. For 1 lot it may be 1.5 lakhs. So for 2 lots it will take 3 lakhs. So you need to have 10-20,000 extra. The reason why you need 2 lots I will tell you. See here, when you take long position, it will take one position long, and then when it is going for short here, first one long position it is going to close, one order, one more order it will short here. So here 2 orders are placed. That's why you need 2 capitals. So here you see -2 is showing, no? -2 is like 2 lots. It is shorting 2 lots here. For that reason you need a lot for 2.
Okay, so what is ROA, sir?
So that based on the strategy here, if you go strategy tester, it is just one moment. This is spot. I'll put futures. We'll see for futures. See for future. This I have to put just 1 minute. Okay, so for 1 year with capital you can define as 3 lakhs. For 3 lakhs 1 year. It is showing around 3 lakhs profit for 1 year time frame with 3 lakhs capital. So almost 100% you can say for 1 year. I am telling for 1 year. For this is for Nifty. For Bank Nifty it will be little bit higher.
Okay, so only on Bank Nifty or the stocks. If there are any stocks,
Stocks
we
also
want
you
to.
can take whichever stock you can take.
Okay, but for that we can do it with less capital itself. Right?
For example, stock. Suppose you want to take Reliance now. Reliance, you can say order size you can put as 100, quantity 100 or 10, and you can leave this as instead of contracts. For 100 you can take. So here if you type that 100, here it will show you long position is like 200 quantity it will take, like this quantity, short quantity 200 like this. But short is only for intraday. In case of stocks you cannot continue short. So like future you can short and continue, keep the position, whereas for stocks you can only do it for intraday, any short positions. Only long you can continue to take position.
Yeah. Intraday only I'm asking. So for example, if you take SBI, right? So like how much we can do it with less capital itself, right?
SBI you can take less capital. whatever that quantity you can define here. Like for example, here you have order size. Here you can define even 10 quantity, even one quantity for testing purpose. I was using only one quantity for testing purpose.
Okay.
It will work. So you will have an intermediate software here called stock developer. Okay. So from this, your signals from this trading view will be taken to this software. From this software, your trading account you can set. For example, trading accounts. I have set my 2 accounts, one in Fires and one in Kite here. Okay, so from whichever account I want, I can link and I can make it as live account, and I can put capital and start trading. So to that account, signals from this trading view, my indicator will be fired, and that will buy and trade. Either you have Fires, Kite, how many other accounts you want, you can put. It will trade automatically. So like this we can do.
Okay. This provided by you for that auto trade.
No, this for this also this company will charge monthly 400 rupees for one trading account. This I can set it up and give.
Okay.
So we have to link with from this particular. We have to link.
Okay. But initially we can do with less quantity and we can test it, and if that works, and we can go it large capital, correct?
Yes. For example, like this. See, earlier I have put DLF everything. So this is right now switched on. If I say restart, trading will start actually.
Okay.
So this is how we can add this one. Can add alert, and there will be logic actually in this. So here this syntax will be there. There will be particular syntax. So in that syntax we can define whether it is intraday or whether it is positional. What you want to do, everything we have to type. And order quantity we can type manually here, or we can take the link from this settings. In the settings you can add what is the order quantity and leave it. Like that we can do. That options are there.
Okay. So name indicator the pivot is ultimate that is work for auto trading also, or they different settings?
No, these are different. Ultimate is only indicator. This ultimate strategy is the algo. So presently this ultimate strategy not given to anybody. So if anybody are interested, this is separately available on a monthly subscription mode. So if you are taking ultimate strategy, for example Algo, if you are taking Algo, that indicator will be, you will be getting it as a free package only. This is same only, everything is same.
Is it possible to read Algo from the
No, your voice is
No. Is it possible to rename like Algo? The strategy name is a bit confusing. Both are same name.
that we can do. Renaming not a problem.
Yeah.
Ultimate strategy, you can make it as a Algo, nothing, not a problem.
Okay.
So this is advisable for people who want to use algo trading or automatic trading. If you want to trade manually by looking at the signals, then you can take the indicator only and trade. Okay. So anybody has any doubts so far? Whatever session we have covered, you can ask me.
Sir, good afternoon.
Good afternoon, Praveen. Tell me.
Sir, I just want to know regarding when you initiate a trade through a strategy, how to go about that. Like if somebody is using Kite, somebody is using Angel, then like if I am using Kite, sir, and if I have to buy this strategy, then sir, how will I punch my trades?
Yeah, see for that you have one intermediate website here called Stock Developers. Like this, there may be different websites. Okay, I am right now linking here with this particular website. So they have some charges like 400 rupees or 500 rupees per month for one trading account. So I have linked my two trading accounts here, Fires and Kite. Kite is Zerodha, okay, Zerodha and Fires. Now suppose I want to trade in Zerodha, I will make this account as live and then add capital in my Zerodha account. Capital will be there, that I will have to link here. So then this particular strategy I will have to create. For example, if you want to trade Nifty or Bank Nifty, I have to create here alert systems. ICICI Bank, Hindustan, like this. For Nifty or Bank Nifty, I have to create alert, and then some settings is there, some syntax is there. I have to write all this syntax, and then this will be linked. So whenever in any stock like HDFC or HDFC Bank, signal is fired to go long or to go short, this will automatically create a buy position or a sell position in your trading account. So that will be showing here, reflecting. Like activity, if you take for example maybe okay, so it will show here like user logged in, then buy signal initiated, buy position taken, like that it will show here. And in the portfolio it will show what is your current position, what is your current value, like this. It will show what is the amount you have, what is the amount put to trades, like profit loss, everything it will show here. Order analysis, it will show order, what are the open orders, everything it will show. So that will be working in sync with this particular algo setup from TradingView. So whenever it is asking you to sell here, for example Nifty or Bank Nifty, it will sell, and whenever it is closing position, it will close. Suppose you don't want to wait for this algo, manually also you can go here and close any of the trade which you have. You can close from here, or you can close from your Zerodha account. Go to Zerodha also, there also you can close your trades. Suppose you think that profit whatever you have achieved is enough, you don't want to continue position, you can close. Manually you can close in Zerodha, or in this application you can close.
So then, I mean, it will work for the normal trading, like for any stock if you are doing, or for Nifty, Bank Nifty.
Whichever stock you want, for that particular stock you have to configure it first. It will work only for the stocks which you have configured, and in this stock also you have option to pause it or keep it active. Like right now I have paused everything here, that's why it is showing dim. If I make it active, it will be like highlighted in dark color now. Then this is
only
active.
Those which are active.
Yeah, only those which are active, it will trade only for that.